when you hear news like this, talking about possible investment flows into the country within a certain time frame, as someone who in that space, how does this news hit you?
I think the truth is there's a huge infrastructural gap or deficit, and I mean not necessarily even in the energy space, across board. In 2017 it was estimated at 890 something billion. Now we're about 1 trillion. So it shows that as the population continues to increase, there's definitely a demand for energy, and we don't have infrastructure to support it. If you look at the recent report by the Energy Charter, which places, on the risk assessment for investing in the energy space in Nigeria, we have the report say that we are at a moderate level. For me, that report is quite generous because I think the risk may be significantly higher. If you look at the various risks, we have the political risk. It's election season again, as usual, for the next 9 months till we see a new government. Most likely things will whittle down on the investment side. There are some other risks. If you're looking at what we see in the market, you also see risks such as capital repatriation risk, which we are seeing now, considering the MTN issue. Before now, it wasn't an issue. Everyone is guaranteed capital repatriation easily. But from what we're seeing now, that's also a potential issue. I think the major issue in the energy space will be the credit enhancement issue. And because now we're seeing a situation whereby the payment assurance guarantee would expire, given by government, next year. Also, the World Bank partial risk guarantee is also due to expire by end of January next year. So in the energy space, those are significant risks that needs to be considered.
So if you had a chance to speak to regulators or people in power and government, on how to, make the investment climate more friendly to investors looking to play in this space, what would be the first 2 recommendations you would give?
I think the first is, and the most critical, is actually the payment or credit enhancement guarantee. We have to find a way to ensure that that doesn't end abruptly, as we are going to see next year, because as it is now, the power sector is still illiquid, and if we do not have a credit enhancement scheme or program, then we may be we are going to have severe challenges with regards to investment in that aspect. So if we can sort out the credit enhancement, that's one. I think another one that needs to be considered will be the regulatory issues, whereby, if I am a project developer, I have to interface with about 10 to 12 regulators in order to get the project going. Those are issues that need to be considered. Like I said, maybe what has happened in the recent weeks with regards to capital repatriation also, we need to be careful, because anyone that brings in money wants to have unfettered access to repatriating such funds. So I think those 3 things, if we consider them if I have the opportunity to speak to government, I think if those 3 things are considered, then we may see more appetite for investment in that sector. But in any event, like I said, the monies in circulation now are chasing consumption, not investment, and that is understandable because there's another election cycle. So we also need to, and I think we are 20 years into democracy now, we need to break the jinx where we continue to see more or less a shutdown of investments when the election seasons are here.
Interesting, because I was going to that. You mentioned the political risks earlier, and then from where you sit, when you hear news about a travel ban for 50 high net worth individuals in the country, and understanding how politically charged the country can be, especially at the time when we're 4 months to an election, what do you make of this kind of information filtering to the markets?
I think the issue is, we should start with the first issue. The government before now issued the travel ban, and it was challenged, and the court has affirmed that government can do that. But on the investment side, it sends a wrong signal, because the issue will be that, one of the things that is being pushed by government is that it doesn't want the assets to be diminished. So if assets are not diminished, the question would be that, or an investor would be careful as to the impact of such an order on maybe potential investments. So I don't think it's a good thing for the market because it sends jitters to investors, especially foreign investors, because it shows that there could be uncertainty. Someone may wake up to, issue an executive order to say that certain investments are under some sort of ban. So I don't think it's in the best interest of the country.
Not in the best interest. So, but now let's look at
to the extent that the fight against corruption is not compromised.
All right, sure. Let's look at something that has also been a problem, in time past. Level of transparency in this space, specifically the oil and gas space. Yes. How do you think this can be better addressed?
Well, the oil and gas space has been, over the years, been labeled as quite opaque in dealings, especially on the government side. But one needs to give credit to also this current government. And credit because, we've seen financial statements and financial performance of the NNPC, which is the cash cow of government, being made public. So in terms of commitment to transparency, what can happen is if the government continues to show this kind of transparency, it can only get better. I think it has, being opaque has been a thing or would most likely be a thing of the past, but currently I think things are better than what we have before now.